What if I told you the White House itself just provided a smoking gun, clearly indicating that Hedera HBAR is about to take over DeFi? And the reason most people aren't talking about it is the very reason it's your biggest opportunity. In this video, we're not just going to talk about price predictions or fleeting trends. We're going to pull back the curtain on a game-changing White House digital asset report that just dropped. This isn't some obscure footnote. This is a blueprint. A direct signal, if you know how to read it, that identifies the bedrock on which the next generation of financial infrastructure will be built. And trust me, if you own ONDO, Link, or especially HBAR, you need to hear this. We're going to show you exactly how Hedera has been strategically positioned, almost covertly, to take over DeFi from the inside out. We'll reveal why its unique technology isn't just different, it's preferred by the powers that be. And by the end of this, you'll understand why neglecting this information could be the biggest mistake of your investing career. But first, think about it. We're in August 2025. The real-world asset, RWA tokenization narrative, is dominating headlines in the US and even across the Atlantic in Germany. We've seen Bitcoin surging past critical psychological barriers, and Ethereum ETFs are a hot topic. Yet, despite an official government document hinting at such monumental implications for Hedera HBAR and its peers, why isn't the entire crypto world ablaze with this news? Is it possible that the biggest moves are always made when no one is watching? What if the very lack of mainstream reporting is part of a larger strategy, allowing certain entities to accumulate before the explosion? And how does a seemingly quiet distributed ledger technology like Hedera become the darling of policymakers, while more popular chains struggle with their own growing pains? The answer, my friends, is more profound than you think, and it touches the very core of financial power. But before we unveil that, let's get into the specifics of this bombshell report. Let's cut straight to the chase. Just days ago, the White House released a comprehensive digital asset report. While it covers a wide range of topics from stablecoins to illicit finance, there's one section that should send chills down the spine of every astute investor. This report, designed to strengthen American leadership in digital financial technology, delves into the architecture of decentralized finance and its underlying technology stack. Now, here's the kicker: the diagrams and foundational explanations for how a robust, secure, and scalable DeFi ecosystem should function. They are derived directly from Hedera's own public documentation. Yes, you heard that right. Not Ethereum. Not Solana. Hedera, the most powerful government in the world, in a document shaping its digital future, used Hedera's architectural insights as its reference point for DeFi. Think of it like this: if you're building a skyscraper, and the government's official engineering manual uses your company's blueprints as the gold standard, what does that tell you about the future of construction? It tells you you're building the infrastructure for the next generation. This isn't just about HBAR getting a shout-out. It's about Hedera being implicitly recognized as a template for secure, efficient, and compliant digital finance. But this isn't the only piece of the puzzle. There's a silent war being waged in the background for who controls the future of digital assets. This White House endorsement isn't just a pat on the back. It's a clear signal about compliance. For trillions of dollars of institutional money to truly enter DeFi, it needs a framework that adheres to strict regulations. And that's where many older, more chaotic chains falter. They're built on principles of pure decentralization that sometimes clash with the need for accountability and security on an institutional scale. But Hedera's unique governance structure, with its governing council of global enterprises, provides a level of trust and stability that traditional finance demands. It bridges the gap between the Wild West of early crypto and the regulated future. This is why we're seeing firms like ONDO Finance explicitly mentioned alongside Hedera in other high-level discussions around real-world asset tokenization. They are building for this compliant future. So, if compliance is the key, and Hedera holds that key, what happens when the floodgates of institutional capital truly open? And how will this affect your HBAR bags? We're about to explore the astonishing growth of Hedera's ecosystem that's already preparing for this tsunami. Forget the mainstream narrative that Hedera is just for enterprise. That story is fundamentally incomplete. While its enterprise adoption is massive, powering everything from supply chains to verifiable AI computations with giants like NVIDIA, the DeFi side of Hedera is undergoing an explosive transformation right now. A year ago, you might have seen a handful of protocols on Hedera. Today, we're looking at over 18 robust, innovative projects, with more launching constantly. Take SaucerSwap, the built-in DX on Hedera. It's not just growing, it's becoming a powerhouse, seeing huge TVL surges. And then there's Bonso Finance, which launched in October 2024 and surged from a modest $50,000 to nearly $50 million in TVL in mere months. These aren't just isolated successes. They are a testament to Hedera's underlying efficiency and growing developer appeal. But even with this growth, Hedera's total value locked, TVL, still seems small compared to the giants like Ethereum. This brings us to the next crucial question. Why is this actually a massive advantage, and what does it mean for the future dominance of HBAR in DeFi? Let's be brutally honest for a moment. How many of you have tried to transact on Ethereum's DeFi ecosystem? Did it feel revolutionary? Or did it feel like navigating a congested highway during rush hour, with exorbitant gas fees and frustratingly slow transaction times? Pause for audience reflection. Ethereum, for all its innovation, has scalability issues. It's like a bustling city with old plumbing. It works, but it's expensive and clogs easily. Now, consider Hedera. Its hashgraph algorithm allows for thousands of transactions per second, with near-instant finality and incredibly low predictable fees. It's like a sleek, modern bullet train compared to that congested highway. The sheer volume of capital, over $78 billion, locked in Ethereum's DeFi ecosystem is staggering. But what happens when retail investors and, more importantly, institutional players realize there's a far more efficient, secure, and government-recognized alternative? Will they continue to pay exorbitant fees and endure frustrating delays, or will they gravitate towards the superior technology? The answer holds the key to why Hedera HBAR is about to take over DeFi. But there's an even deeper layer to this story. A critical piece of infrastructure that's quietly linking Hedera directly to mainstream finance. The path to institutional adoption in DeFi isn't just about speed and low fees, it's about security and familiarity. That's why the recent integration of Safe wallets, formerly Gnosis Safe, onto the Hedera EVM is a monumental game-changer. Safe is the industry standard for multi-signature wallets. Think of it as a corporate bank vault where multiple trusted individuals need to approve a transaction. This isn't just for small retail users. This is core infrastructure for highly sophisticated DeFi players and major enterprises. This integration, facilitated by partners like Palmera DAO, means that big players can now enter the Hedera ecosystem with the same level of security and operational efficiency they expect from traditional finance. It combines the familiarity of Ethereum's virtual machine, EVM, with Hedera's institutional-grade features. Imagine a CEO or a CFO feeling comfortable moving millions, even billions, into DeFi because the underlying technology offers the security they demand. This move isn't just enabling, it's inviting the biggest players in finance to build on Hedera. But the plot thickens. There's an even more powerful force at play that could truly propel HBAR into the stratosphere. For years, crypto has existed in a regulatory gray area, a wild west that scared away traditional finance giants. But that era is rapidly closing. The White House Digital Asset Report isn't just descriptive, it's prescriptive. It signals a clear intent to foster a regulated environment that encourages innovation while protecting investors. This shift is the single most powerful catalyst for institutional money to finally enter the market in force. And when we talk about institutional money, what's the biggest magnet? ETFs. We've seen the impact of the Bitcoin ETFs. We're anticipating Ethereum ETFs. But what about HBAR? The whispers are growing louder, and the arguments for an HBAR ETF with high approval odds are becoming undeniable. Why? Because the very qualities that the White House is prioritizing, security, scalability, compliance, and enterprise utility, are hallmarks of Hedera. So if regulatory clarity is paving the way for massive inflows, and Hedera is uniquely positioned to benefit from it, what does this mean for the future price of HBAR? And how quickly could this truly take over DeFi? The answer might surprise you, and it involves understanding how all these pieces fit together for a truly explosive outcome. Let's look at the numbers. Ethereum's DeFi ecosystem currently boasts over $78 billion in TVL, with over 1,500 protocols. Hedera, with its mere 18 protocols and around $120 million in TVL, might seem insignificant by comparison. But this is where the opportunity lies. This is the tipping point. Think of it like this: Ethereum is a mature, established city. Hedera is a rapidly expanding modern city with superior infrastructure. As more users and, crucially, more institutions seek efficiency, lower costs, and regulatory certainty, they will inevitably migrate. We're not talking about taking over overnight, but a steady, accelerating rotation of capital. If Hedera even captures a fraction of Ethereum's current DeFi market share, we're talking about billions, potentially tens of billions, flowing into the Hedera ecosystem. This isn't about Ethereum being bad, it's about market forces gravitating towards the most efficient technology. And when you combine Hedera's technical superiority with its undeniable White House endorsement and its enterprise-grade features, the path to HBAR becoming a dominant force in DeFi becomes not just plausible, but probable. But there's a secret ingredient that truly sets Hedera apart from every other network. We've talked about speed, fees, and security. But what is it about Hedera's underlying hashgraph technology that makes it so uniquely powerful, especially for DeFi? Most blockchains are like a single file line of cars, one block at a time, prone to bottlenecks. Hashgraph is different. It's like a vast, interconnected web where every transaction is instantly gossiped to every other node, creating a complete picture of events almost simultaneously. This gossip about gossip mechanism, combined with asynchronous Byzantine fault tolerance, ABFD, means unparalleled speed, security, and fairness. No wasted blocks, no miners competing, just pure, unadulterated efficiency. It's why transactions are so cheap, often fractions of a cent, and so fast, finality in seconds. Why is this crucial for DeFi? Because DeFi demands real-time processing for things like automated market makers, lending protocols, and complex derivatives. Latency and high fees kill innovation. Hashgraph enables it. But how does this technical marvel translate into real-world projects that are changing industries right now, further solidifying BAR's position? The biggest narrative in crypto right now, and for the foreseeable future, is real-world asset, RWA tokenization. We're talking about taking physical assets, like real estate, art, commodities, even government bonds, and putting them on a blockchain as digital tokens. This market is projected to reach tens of trillions of dollars by 2030, with estimates of nearly $19 trillion. This isn't just big, it's unstoppable. And guess what? Hedera is perfectly positioned to capture a massive share of this market. Its high throughput, low costs, and institutional-grade security make it ideal for managing the immense volume of transactions that RWA tokenization demands. Projects building on Hedera are already tokenizing everything from carbon credits with Dovu to real estate with StegX. The White House report's emphasis on integrating digital assets into mainstream finance is a direct nod to this very capability. This isn't theory, it's happening now. The convergence of regulatory clarity, institutional demand, and Hedera's superior technology is creating a perfect storm for HBAR. But there's one more layer of deep integration that you absolutely must understand. You can't talk about real-world assets or DeFi without talking about Chainlink, Link. Chainlink is the undisputed king of oracles. It's the secure bridge that brings real-world data onto the blockchain. Imagine trying to tokenize a house without knowing its current market value, or automate a supply chain without real-time tracking. That's where Chainlink comes in. The beauty here is the deep symbiotic relationship between Chainlink and Hedera. As more and more RWA projects build on Hedera, they will rely heavily on Chainlink's cross-chain interoperability protocol, CCIP, to securely move data and value across different networks. This isn't a competition, it's a powerful alliance. Chainlink provides the secure data, Hedera provides the ultra-efficient, enterprise-grade ledger to process it. This partnership further cements Hedera's position in the RWA narrative and its ability to take over DeFi from a utility perspective. But what about the elephant in the room, the price of HBAR? And why has it, until now, remained relatively overlooked despite all these groundbreaking developments? If you've been watching the HBAR price chart, you might be thinking, if this is so big, why isn't it already at $1 or $5? And that's precisely the point. The market often takes time to digest monumental shifts, especially when they involve institutional and governmental layers. This quiet period is exactly what savvy investors call the accumulation phase. While retail is distracted by short-term pumps, the smart money, the institutions that read those White House reports and understand the long-term vision, are quietly accumulating. They are not trying to pump the price. They are trying to buy low before the inevitable mainstream awareness hits. When we look at BAR's technicals, we see clear consolidation around current levels, acting as a spring coiling for a massive move. Analysts are eyeing key resistance levels, with projections reaching 30 cents, then 57 cents, and beyond, ultimately targeting previous all-time highs and beyond in this bull cycle. This isn't just hopium, it's based on fundamental utility and a narrative that's gaining unstoppable momentum. But the real question is, how do you, as an individual investor, capitalize on this impending surge? So you've seen the White House confirmation, the institutional push, the booming RWA market, the technical superiority of Hashgraph, and the powerful partnerships. You understand that Hedera HBAR is about to take over DeFi by becoming the go-to infrastructure layer for compliant, institutional-grade digital finance. The question now becomes, what does your portfolio look like? Are you positioned to benefit from this seismic shift? This isn't about chasing fleeting pumps. It's about investing in the foundational technology that literally has the stamp of approval from the highest levels. But what if you're feeling overwhelmed? What if you're not sure how to identify the next catalysts or how to manage your positions as Hedera's prominence grows? The good news is, you don't have to be a Wall Street insider to understand what's coming. The signals are clear, for those willing to look. But there's one final crucial piece of information that ties this all together and points to the sheer scale of the opportunity. We started this video talking about an incoming 5,000x growth potential for HBAR. While that might sound audacious, let's connect the dots. When the White House explicitly references Hedera's architecture for the future of decentralized finance, when institutions are actively integrating HBAR for multi-trillion-dollar real-world asset tokenization, and when the market hasn't even begun to price in this level of fundamental utility and adoption, 5,000x isn't just a number. It becomes a mathematical possibility. Think of it, if a fraction of that $78 billion locked in Ethereum's DeFi, or even a tiny percentage of the projected trillions in RWA moves to Hedera's hyper-efficient network, the demand for HBAR will be unprecedented. We're talking about a true supply shock against massive, escalating demand. This isn't a fleeting trend, it's a fundamental re-evaluation of what's possible in global finance. The Hedera Governing Council, with its global powerhouses, isn't playing small. They are building the financial rails of tomorrow. And the HBAR token is the fuel for those rails. The future of DeFi isn't just decentralized, it's efficient, secure, and compliant. And that future, my friends, is being built on Hedera. The White House confirmation isn't just a signal, it's a stamp of inevitability. You've just gained an incredible edge. You now understand what most people in the crypto space are completely overlooking. The journey of HBAR from an undervalued gem to a global leader in DeFi is not just a possibility. It's a trajectory set in motion by the highest levels of power and adoption. Your transformation begins with this knowledge. You're no longer just holding HBAR, you're holding a piece of the future. This isn't the end of the story, though. The real-world asset space is exploding, and there are other key players you need to know about that work directly with Hedera. To truly understand the full ecosystem and maximize your potential gains, you need to see our deep dive into Oendio Finance and Chainlink, two other projects explicitly highlighted by the White House, and absolutely critical to Hedera's continued dominance. Click on this video right here. Don't just watch the market, understand the hidden forces shaping it. Your financial future depends on it.